This week, we're going to talk cattle inventory numbers and ag prices. Welcome to the Weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner. With us this week is Charley Martinez with the University of Tennessee. Welcome back, Charley.
Good to be back, Megan.
All right, we're going to talk that much anticipated cattle inventory report coming up in a little bit. But first, let's recap what happened this week in the markets.
For sure. So this week in the market, live cattle prices closed almost $2.40 higher compared to last week, closing at $209 per hundredweight, almost $210 per hundredweight for this week. So that's really good news. February live cattle prices were at $204.60, which is 75 cents higher compared to a week ago. And the March feeder cattle futures was down $1.45 on the week, down to $275.73. Choice box beef was at $327.68 to end the week, which is down 1.1%, so relatively marginal change from last week. The pork cutout was up to $93.58, which is up from $92.02 last week, so a 1.7 increase. National Base Hog Carcass prices were kind of interesting to see. They were up 1.77%, up to $82.15. If you compared to last week, that's actually up from $80.72. And then the February lean hog futures, now I got the word jumbling happening. February lean hog futures were up almost $2 to $84.17 on the week.
Charley, when we take a look at the strength in prices overall, there has to be, I would assume, some optimism just in the protein sector as we look ahead. I say that knowing that there's potential tariffs and retaliatory tariffs coming into play. How much are you talking like risk management, being smart about marketing and not losing advantage of some of these prices and these opportunities?
Yeah, Megan. So kind of the month of January has been my LRP month. For instance, whether it's cattle producers or even cattle feeders, one of the biggest things that is kind of like a double-edged sword are these high prices, as you're talking about, with some impending unknownness of potential tariffs. And so the thing I keep talking to producers about is, yeah, these prices are great, and they offer a lot of optimism and kind of some happiness to a certain extent when it comes to the potential of what can happen. And we've seen prices stabilize throughout the supply chains, whether you're talking pork or beef, expensive feeder calves becoming expensive fed cattle. And then whenever they go on to be boxed beef and retail prices, we're seeing prices, stabilize and actually have that transition of increased prices across the board. But when we're talking about fed cattle and feeder cattle, a 10% drop in prices, that's a massive drop, right? If we think about a potential of a tariff being implemented or tariffs being implemented to some trading partners, a 10% could turn into a 20%, or it could be even higher than that overnight. And if you were going to be marketing your animals on the backside of a tariff being implemented, you're talking about massive risk exposure. And so this week, I was actually in Pennsylvania talking to cattle feeders doing a beef outlook, and that was one of the things I was talking about was prices are so high and it looks so great. This will be the optimal time to probably lock in some type of insurance policy to give yourself at least that floor of high prices. If we see a price drop overnight, for instance, or over a given amount of days, that can get pretty unfortunate. That can become pretty unfortunate for the person that's marketing those animals. I know, and I'll say Pennsylvania because I was just there. People are getting ready to start marketing their fed cattle, and from that standpoint, if we see some tariffs be put into place, they could be marketing their cattle at a time when prices drop, and that would be quite unfortunate if they're not protected on the risk side.
And I'm sure we'll talk about that more coming up as we get into the cattle inventory numbers. But let's talk some slaughter numbers from this week. How are things looking in comparison to last week and last year at this time for both cattle and hogs?
Yeah, so when we get into the slaughter numbers, at the end of the week, cattle slaughter was at 600,000 head, which was up 1,000 from last week. But if you compare it to last year, it was actually down 32,000 head. On the hog slaughter side of things, we were at 2.574 million head, which was up 97,000 compared to last week, but also down 128,000 compared to last year. So we see some increases, week over week changes, but we also see some massive drops and differences compared to a week ago.
I may reserve my question for another time. I didn't know if there was if we're seeing less slaughter pace. Is it an animal availability? Is it labor force? Is it a combination potentially of both?
Yeah, so I think if you remember, we talked about the WASI reports when we first did this year's weekly update, and it was one of those things where they had made adjustments and expectations on the cattle and hog side of things in terms of inventory. And so I think if you were to check some of the weekly numbers, we might be up week over week, but we're expected to be lower as we compare to last year. And even if you want to do a previous 5-year trend, we're going to be down just because we have fewer animals to be slaughtering, right? And so if we look at national herds moving forward, we're going to be expected to have fewer and fewer cattle being slaughtered. And we've mentioned it before, but slaughter weights are up, and so we might be down, but there's going to be some adjustments made at the packing level to try to get those animals to be bigger, even though they're slaughtering less, and they're going to try to keep up with production as much as they can.
All right, let's get into this January 1 cattle inventory report from the USDA. Just a reminder for those who may not have tuned in before, normally we get this report twice a year. It was canceled due to budget battles and politics in Washington, D.C. in 2024 in July. So this is really the first time we're getting to look at these inventory numbers in a year.
Yeah, so as you kind of set the floor, this is kind of like Christmas to us as ag economists, because this is going to be the only report we get to see snapshots of the national herd inventories. And so, we get anecdotal evidence from like percentage of heifers on feed and stuff like that. But the January 1 report, it had some interesting things to talk about. So just overall, all cattle and calves totaled 86.7 million at the beginning of this year. Which is 1% lower compared to last year, and last year was at 87.2 million head. And so the biggest thing that we take away from that, though, is when we were moving from 2023 into 2024, our pace of liquidation was 2%. If we compare 2024 to 2025, we still liquidated 1%, but that 1% is still slower than we saw in the previous year. And I think that's kind of telling. One, that gives us, some type of signal that we're slowing down, the herd size in terms of the shrinking and the liquidation that we're seeing. But I think it's kind of almost a stat that we got to pay attention to throughout the year, though, when it comes to cattle on feed and placements and things of that nature, because when we think about national cow slaughter, prices are really high. And we see that there's the total number of slaughter cows has been decreasing. And so to me, when I see this national report and the national herd, we know that people have done a pretty hard job of culling, or have done a hard culling job for the past, 2, maybe 3 years. And so, people are sitting there with calves and they're saying, hey, I might not be able to expand, but I'm not going to be culling as much because, one, they've already done that. But two, as long as the cow's healthy and she's doing her job and spitting out a calf on time and every year, those calves are very valuable. And so I was expecting us to decrease probably higher than what came out, but it was still a decrease nonetheless, and it was a slower pace. And so that was like one of the first things that I saw when I opened the report, just from that first page that comes out. But as we dig deeper into the report, beef cows were at 27.9 million head, which is down 1.3%, or almost 150,000 head compared to a year ago. Again, the same story, though. The pace of change from 2024 to 2025 was lower compared to the pace of change from 23 to 24. And just kind of refresh that memory, or for folks, that was at 2%. So again, we go from a 2% decrease, 23 into 24, down to a 1% decrease from 24 to 25. But the more fun stuff to look at is not just the aggregate of numbers. It's more of like, where are things changing in the country? And so not every state decreased, not every state increased their herd size. A lot of states were kind of held constant. And so on the cows that have calved, beef cows that have calved, California and Virginia were both down 6% respectively. Colorado was down 7%, so that's a huge number. Kentucky was down 4%, and Pennsylvania was down 5%. And those were kind of the bigger yearly changes that kind of stuck out to me. But then there was also some increases. Texas and Oklahoma both increased 1% respectively. And so we know that Texas is a large cattle state. So a 1% increase is a pretty important sign or a pretty important number to think about. Missouri was up 2%. And a big jump, kind of one I was not expecting, was Wisconsin, which was up 6%. So we have a mixed bag of some states increasing, some states are decreasing, and then we have a lot of states kind of holding steady. And that was something we kind of expected as economists, just because if we think about herd expansion or any possibility, drought is always going to be one of the drivers, and we know that there's been some drought in certain areas. But if you look at Oklahoma and in large parts of Texas, drought was kind of not really needing to be thought about. But then the other side of that coin is inputs. Inputs are kind of in a holding pattern, so they're still kind of high relative to the previous years. And then also when we start thinking about land availability, I think in the biggest differences between the 2013, 2014, 2015 timeframe and when we saw the ramp up of the herd versus right now, rental space and rental acres are more expensive. Availability of acreage is down in certain parts of the country, and I'll use Tennessee as a prime example. Middle Tennessee now versus Middle Tennessee 10 years ago are two different things. A farmer might not be able to rent the acres out there next to him because it could be in development now, it could be in housing development, for instance. So that's an extreme example, but it's just kind of highlighting that point. If we
Charley,
get it, yeah.
When you look at these numbers, obviously we're talking drought and we're talking growth. When you look at some of the areas that stayed the same, and if I'm throwing you a curveball, I'm sorry, we can always come back to this another time. But like thinking about the Dakotas or some of those other areas, how are those also stacking up? Like I think about kind of that Western Corn Belt where we see some of those other types of herds or some of those larger operations, just knowing about growth and how much does that play into this when we think about only getting these numbers once a year and to have some insight into what's been happening.
Yeah. So, if we look at North Dakota for beef cows that have calved, they've stayed pretty constant. There was only a minimal increase. If we look at a place like South Dakota, just south of them, they actually had a 3% drop in beef cows that have calved. And so, it kind of, if we think about it from that standpoint, they're in the same region per se, right? But within those industries, we see some fluctuations and differences. And so, it's going to be one of those things that I think that moving forward, if we think about expansion happening probably this year or possibility, I think that there's a lot of learned by doing activity or thinking that's happening. What I mean by that is last time we had the herd liquidation, when we ramped back up, we ramped up pretty fast, pretty quick. There was a lot of things that were in our favor as producers for producers on that side, lower cost of inputs, drought was not an issue. And now and then following that, there was a massive drop in prices pretty rapidly because we ramped up so fast. And so I think when we look at states across the country, when I say that a lot of people are holding pattern compared to the previous year, I think some of that could be allocated to the fact that people might not want to ramp up as fast as they did last time because they got burned pretty hard on the back end. And then also, if you look at the cost of replacement females right now or bred heifers and bred cows, they're pretty expensive. And so I think that's kind of playing into the fact of why we're seeing a lot of these states hold pattern. And yeah, we use South Dakota, North Dakota, and they're in the same region, but they have different activities happening in terms of their herd size. And so, you're in Kentucky, we're in Tennessee. We both had similar type patterns where we saw some decreases in numbers, but y'all had a lot more in terms of percentage, y'all had a higher percentage change than us here in Tennessee. So I think to your question is valid. And I think it's kind of just one of those deals where there's a lot of factors that might limit the expansion or why we see people just kind of sitting where they are just because of what happened last time, let alone of all the factors that we've talked about.
I would assume age of producers might come into play, or being able to transition from one generation to the next, and who's coming back to the farm and who's not.
Right. I mean, that is 100% a possibility. If we think about this might be the last time that a lot of people can cash in with their farm in terms of revenue. And so they might be saying, hey, we're gonna, if we got any little debt still on the books, this would be a good time to get it off the books. Or I'm getting ready to transition this farm to someone else, whether it's a family member or someone that they know that's taking it over. Could be really setting them up in a really good position to have capital on hand. For instance, we know that cash flow is important, and it's very important when it comes to financial record keeping and all that thing, or all of that type of stuff. That cash is king. And so it might be, that could be 100% one of the reasons why people are acting the way they are in terms of how they're either holding steady or increasing or decreasing. And again, I think that kind of gets back more towards the learn by doing, and how they might have got burned the last time when they ramped up, and they don't want to do that again.
All right, so let's talk the rest of this report and some of the numbers that stood out to you. I'm assuming we're going to talk a little beef replacement heifers.
Yeah, so it's actually the next little bullet point I had. Beef replacement heifers were at 4.67 million head, which was also down, go figure, 1% from a year ago. And so if we mention the other things where we were comparing 23 to 24, and it was a 2% decrease. When we get to the beef replacement heifers, a 1% decrease is still on par of what we saw the previous year. And when I was in Pennsylvania earlier this week, it was 1.4 last year in the January 1 report. And so comparatively, 0.4% lower in terms of the culling rate, or of the replacement retention rate. But we also had a smaller denominator this time with fewer number of cows too. So to me, that kind of signals that we are still holding pattern, moderately increased compared to last year in terms of rate of change, but it's still down compared to the previous year. So there is some signs of certain states holding still and also having slight increases, but on majority it was still down across the board. The 2024 calf crop. And so another one of the good things about this report is kind of gives us a summation of what happened in 2024 with the calf crop. In the U.S., it was estimated at 33.5 million head, which was slightly lower compared to a year ago, which was in the January 1 report of last year, it was at 33.6 million head. And so to us, the thing that signals to me is that when we think about the cows, the ones that on the beef side that are calving and things of that nature, they're still doing their job and holding pretty much same in terms of pattern, which gets back to the comment that I made earlier in terms of, I think people have already done a really hard cull the last couple of years. And so we're not going to see much adjustment on the calves or on the calf crop side, just because we've already taken a lot of those unproductive females out of the herd. And so when we think about the calf crop, if we really have a marginal change like we're looking at, that means people are saying, hey, she's doing her job, we're going to keep her in there, we're going to keep calving. And that's why we see pretty much a steady number in terms of the calf crop compared to a year ago. Knowing that beef on dairy is becoming such a hot topic and an interest to a lot of folks, it's always important to look at the dairy cow numbers now. And so this report gave us the dairy cow herd numbers as well. And the dairy cow herd remained the same at 9.35 million head. Historically, we know that if it decreases marginally, if anything. But for it to be holding steady, I think that's a function of milk prices and kind of the positivity that people have been seeing over the last couple of months. But I also think it's a function of the beef on dairy kind of phenomena that we're seeing. And I say phenomenon relative to the fact that we know that beef on dairy has always been around, but now with advances in technology by semen companies to try to maximize a beef sire that can really optimize the genetics of the dairy cow, I think people are sitting there saying, well, I can sell day olds for $800 or $1,000, and I also get the milk off the cow. Why would I cull her? And there's no reason to, given feed costs kind of being low and everything from that nature. I think we're not going to see any decrease in the dairy cow herd until we see prices, take a tremendous downturn from where they are right now. And so from that standpoint, it wasn't, it was kind of like anticipated to a certain extent that the dairy cow herd was going to stay pretty constant, just because we know on the dairy side of things that's becoming a really profitable venture for the dairy producers. And then as we think about beef on dairy and its impact inside the feed yards, by doing some backward induction, one of my grad students is actually working on this project, kind of estimating the beef on dairy, makeup within the cattle on feed periodically. We know that there's probably a max of around 14 to 15% that could be out there. And that's when we take the dairy cow numbers and subtract out the previous year's cows that were kept as replacements. And that gives us a number that we can look at. The max number is around 14 to 15% over the last couple of years. But we also know that there's still a lot of dairy cattle out there that are straight bred dairy. And so we know we can back off that number to around, 10 to 12%, comfortably. And then if we start thinking about the beef on dairy moving forward, it's probably going to take up a larger percentage, just because if we have dairy cows staying the same, but beef cows continuing to decrease, that percentage naturally is just by numbers is going to go up inside the demographic of a feed yard. But the key thing is that, it's not going to be something where I've heard people say that they make up 25%. It's mathematically impossible. But it's important and to note that, the dairy cows are doing their part in terms of putting in cattle on feed.
Just your 30-second takeaway when you look at the report compared to pre-report expectations and what this looks ahead, how this kind of sets up 2025, neutral, positive for prices. What are your thoughts there?
So I'm going to cheat and also use the WASDE report inside my 30-second answer. So if we take the WASDE report and we take this report, to us, that the biggest thing is that we know we're going to have continuation of tightening supplies. If supply goes down, we know prices are going to continue to at least hold steady, if not increase, depending upon other factors that are out of control of the cattle industry, i.e. like a tariff. And so the positive side is that tightening supplies gives elevation and support to prices where they are. The negative side is that it also increases the risk exposure for producers moving forward.
All right. January ag prices also out today, maybe not as exciting as cattle inventory numbers. When you take a look at these prices, what are some of the things that you pull away from there?
Yeah, so I have three quick facts that I kind of pulled out of it that I thought were interesting. So just overall, when you compare December to November, there was actually a 5.3 increase in the index. And then also if we compare December's index versus the previous year, it was actually 12% higher compared to 2023. And so we compare 2024 to 2023, 12% is nothing to kind of shrug your shoulder at. That's a massive jump in terms of prices across all livestock. If we break that down into beef cattle and hogs, on the beef cattle side, December prices received for all cattle was at $190 per hundredweight or $1.90 per pound, which was up $2 per hundredweight compared to November. So we had an increase in prices for all beef. And then if you compare that to previous years, the $190 in December for all cattle was up from $172 per hundredweight in 2023, and then also up from $154 per hundredweight in 2022. So we see the market at work, tighten, smaller supplies equal higher prices, and that's what we see, year over year change in December's or comparing the December's. In all hogs, kind of similar story. In all hogs in December, the price was at $62.30 per hundredweight. It was down compared to November, and it was down approximately $3.10 per hundredweight. But we kind of expect that if you look at historical trends, we know that we see a drop historically from November to into December. But if you again compare what happened in December of 2024 compared to previous years, it was actually up from $53.30 per hundredweight in 2023, and also it was one of the crazier things that was kind of sticker shock to me when I got it. It was the only one that we saw down. And so the hogs were down from 62.50 per hundredweight compared to 2022. So down relatively 20 cents. And so I think some of that is the market at work when you compare the national hog size and what availability of supplies in 2022 versus 2024. There were some dynamic changes. And so I think that's why we see that difference. But year over year change, 23 to 24, both were up.
All right. Before I let you out of here this week, and we just have a couple of minutes left, I want to talk about what's going on with Mexico. Obviously, we talked about this in the cattle on feed numbers last week. I'm assuming it's also showing up in some of the inventory numbers from this week's report. We have not been bringing in live cattle from Mexico since the end of November. So we're effectively at 2 months. Mm-hmm. When you look at this, what are some things, one, that we need to think about in terms of supplies moving forward? But two, what is kind of your overview of what's happening, and then what's happening to those cattle that aren't coming in?
Yeah. So, it's one of the this is one of those situations where it's nice to have friends that are buyers of Mexican cattle here in the U.S. And so off the top, we still have not brought in any cattle. And the only thing we have brought in from Mexico, though, is horses. There was actually 11 horses that came in from Mexico last week or over the last week. And so that's two signals to us. One, no cattle are coming in, but they are letting something in, right? So there's obviously some type of live animal protocol that's occurring. But as I mentioned, some of my friends back in Texas, I was talking to them about this, and they were mentioning that they historically bought a lot of cattle in that Q4 of a given year. And we know that a lot of our cattle, whenever we're buying from Mexico, come in November and December, and we get a lot of supply out of there. Well, the feed yards that are historically buying Mexican cattle, they're sitting almost empty, in certain parts of their feed yards because they didn't get that supply that they normally are used to. So they're having to do other things with their money to try to get through, and it's kind of putting a squeeze on their profit margins from a feeding standpoint. And so from that perspective, though, the kind of the big thing that I think can happen that's not really being talked about enough is if we are bringing in a lot of cattle during that time frame historically in Q4 of a given year, that means that we don't have the feeder calf supply sitting in the feed yards here in the U.S., and therefore we actually have a tighter supply happening in the yard that will not be that will not be sold, whatever weights that they're being sold at for fed cattle, whether it's they bring them in at six weights or 7 weights and get them all the way to 1,400 pounds, however many days that takes them. Whenever they would historically be hitting the fed cattle market and getting sold to packers, we're not going to have that tightening supply. So at this point, we're sitting at almost like a 2-month artificial, lag in feeder calf supplies and also fed cattle supplies in the future. And so when I think about that and I look at the futures markets, that's something that I think, it's kind of undervalued to a certain extent because we're going to have some type of slack that's going to hit. And it's almost what we call in supply chain theory a bullwhip effect. Something that happens now is going to eventually rear its head at some point in the feeder calf supply. We know we have lower calves that are going to be hitting the yard this year, given the report that we had today. So I would expect that to have impacts on prices moving forward. And when will we start? I don't think no one really has an exact formula. And then we think about, and I mentioned last time, the cattle probably will start coming in at some point. And talking to those friends back in Texas, feeders in Mexico and sellers of cattle in Mexico basically said, well, we'll just sit on these cattle and start feeding them out here. And so they're from that standpoint, it might be in their best interest if they're going to put in feed and put in commodity and start growing them. They have packers in Mexico that are willing to buy. So we might not even see those cattle whenever they would normally, say, hey, we have open borders, let's get back to trading and bringing cattle across, whatever that protocol looks like, they might not see, or we might not see a lot of those cattle coming because they started feeding them out and they're going to grow them out in Mexico. So I think there's a couple of things at play that I think will impact the feeder calf supply and eventually the fed cattle supply here in the U.S.
There'll be plenty for us to continue to talk about. We continue to follow that story. APHIS, the USDA's Animal and Plant Health Inspection Service, still hasn't given a date yet. So everybody's kind of watching and waiting for the same things. Charley, it's great to see you.
It was awesome to be back.
To have a weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.